Welcome, market sniper time. Right along. Yep, let's take you into the Cyprus desert. We're going to talk about technically the video I most need to record in the new week chart-wise that I've been seeing. I have discussed before, and that is the UK, United Kingdom debt markets, which of all the debt markets are the most primed to go up in yield, extreme down in value. This is leading to an interest rate hike, and I want to tell you the names of the charts that I'm referring to. So it's the GB for Great Britain, 10-year, 20-year, 30-year, and 40-year yield. These are all in breakouts. Now, some of them we highlighted when two of them out of the four I mentioned, 10, 20, 30, 40, had broken on technical patterns before, but had gone into a little wind up, like a holding for an extended period. And the other two triggered back end of this last week, Thursday, Friday. And we highlighted to many that the UK has done its damnedest to push its way to the front of the queue on the debt debasement collapse. So the United Kingdom wants to jump in front of America, which obviously has very serious debt-based issues as well, and has had quite high devaluation recently, scaring off all the big puff adders. What does this mean? So let's just go back to our primary thesis that we gave back end of 2020 when we called the turning in the debt markets, the 40-year bull is over. We said what took 40 years to escalate up will end in a lot shorter time on the downside. Elevator down, escalator up. And that means rising interest rates. Now, I saw a number about 2 weeks ago of in fact, I stand corrected, last week in data. Let's talk about last week in data in conjunction with these debt market stories. There was a CPI and a PPI number that were coming out. After the CPI number, that was pretty benign, a number of people, including our friend dollar maximalist Brent Johnson, was saying tariffs clearly aren't inflationary because the CPI number was low. Now, we've already mentioned in previous ride-alongs the three attack vectors of complete deception in fraudulent stats. The non-farm payrolls employment number, the true inflation number, which is being grossly understated. I made the error of saying that the Walmart basket had gone up 138% in 1 year when I meant 5. Like for like basket. Done by housewife who had the slip from 2020. And I also pointed out the employment participation rate shenanigans. That is another attack vector of lying. However, a lot of people like to buy, you know, and the Fed loves to say it's data dependent. Data dependent means they don't look at other people's real measures of inflation. They only work off the statist measures of statistics. And that's the BLS. And of course, their chosen methodology, which has in the non-farm payrolls number, the birth death model, assumptions, multiple revisions, the monthly and the annual. I don't want to revisit all those again. I've covered it before. Just a small reminder if you're a first-time viewer. On average, the non-farm job creation number gets revised downwards over the last year, 58,000. And then a second haircut at the end of the year, where on average month to month, another 73,000 is taken out. In fact, in the last 2 months, the monthly revisions were down a whole bunch more. 133 for June and 125,000 for May. 133,000, 125,000. So it's getting worse. And if you add the annual revision on a monthly basis, which last year was 819,000, that 73,000 has to also be taken off. Anyway, so a bit of a sidebar about the statistics being a lie, but nonetheless, Brent was saying, you see, tariffs not inflationary, and we're saying 100% it is. The inflation stats are a lie. Then the PPI number came in. Expected 0.2%. Remember, this is a monthly number, so that's got to be 12 times by 12 to give you a projection annualized. In other words, if it carried on at that monthly rate 12 times, what would be your annual number? So 0.2 sounds low, but even on its own, you should be timesing it by 12 and getting to about 2.4, which is the liar number of the CPI-ish. It's kind of in the low 2s, 2.4, 2.7, the CPI range ish, annualized. And of course the PPI, and for those that again new to statistics, production versus consumption. So PPI stands for producer price inflation. That's the inputs for manufacturers that are making things. How much have their costs gone up? And then CPI, how much have the prices you pay at the till point of sale for your goods? PPI came in at 0.9. That's almost 1%, giving an annualized of 10.8%. Now, 10.8% is a double digits increase, or it's the inflation for businesses making things. And invariably, when costs go up, inventory and stock initially is cleared still at the old price, but new production that is having the higher cost, invariably, to make a reasonable return, goes out at a higher price. Otherwise, businesses are making goods and actually costing money. They're borrowing money from banks to operate, to lose money. It's like standing on the street corner and selling $20 notes for $12. Nobody's in that business. It's not one you run for a long time. So a lot happened last week. I started out talking about rates on the British debt, and we're coming back to that because that's the main story. But in the US, quite clearly, the next buffer shock is going to be at the consumer level, given the extremity of the producer price inflation. So what you've had is a bit of margin absorption and inventory dipping, keeping an artificially low CPI number, which gets cleared. It's a temporary aspect that gets cleared with the new producer price inputs. which obviously will include things such as tariffs and the debasement of the money. Remembering that we explained that tariffs are a tax on the US consumer, not a tax on the country that's having the tariff levied on it, apart from the fact that their market competitiveness will go down relative to domestic substitutes where equivalent true domestic substitutes exist. And there's very rarely a perfect 100% substitute. For example, a Ford's not a substitute for a Mercedes or a BMW, it's an alternative. It's quite a close alternative, so it's quite a high level of substitution, but it's not 100% substitution, because you might, on the features of a BMW, they might be absent on a Ford, there might be a different standard or quality. I keep using cars because they're simple examples, but it's actually much more than about cars. It's about all sorts of things. It can be medical instruments, it can be certain kinds of batteries, certain medications that are made in a certain way, right the way through to a whole variety of products. I mean, I'll give you a stupid example. I choose to take creatine as a supplement. America makes creatine and so does China, but you take more than a certain amount of that stuff and you get the runs because it's got a high sulfur in it. It's not to the same quality as a German Create Pure, which makes incredibly clean creatine that doesn't give you the runs and improves your absorption. You could start consuming your local creatine, but it's an inferior product quality. That's not saying everything made in Germany is inferior to America, but a lot of things can't be substituted perfectly. So tariffs are inflationary. They're a tax on the UK consumer, the US consumer, the domestic consumer, and they're also a pressure on the market share of the foreign exporter to the United States. So it's trying to do a couple of things: reduce the extreme deficits that America runs with the Eurozone and China, and also Switzerland, hence why there was a bit of a thing with the gold bars as well, which is outside of the EU. And as a result, we have what we have. So clearly CPI is going to be, even on their fake stats, going a lot higher. Check out John Williams for real idea of what your true CPI is, as per a standard basket that's gone unchanged since 1982, and the anecdotes I've been giving you about Walmart. So America is going inflationary because their currency has been debased. The currency has been debased because you can't have debt debasement without currency debasement. They're the Siamese twins merged at the head. You can't have the one Siamese twin punch the other Siamese twin in the face and then the other one respond in kind without them both getting beaten up. Fiat is born out of debt. The TLT collapsed, which is a proxy for long-term debt instruments in America, by 55%. So now you're seeing the dollar collapse by a similar degree, and it has. But you might say, well, it's only on average 8 to 15% down. By the way, it's 42% down against the ruble. It's 14% down against the Hungarian florins. It's 13.76% down against the Czechoslovakian, and so on. Literally all the Eastern European countries are mid-teens higher than the dollar. The euro itself is around 10 or 11% higher than the dollar, and it's weaker than its Eastern European counterparts, the Swiss franc, etc., and etc., etc. So what you've actually got is the other fiats have also been falling, but America has fallen so much that its currency has fallen even relative to falling other currencies. And that's quite an interesting concept. How many of you knew that the dollar was down 42% against the ruble? We're punishing Russia with sanctions. Well, they don't have the debt that you have. They had their debt crisis and they fixed it. They have gold. Their currency is up 42% this year. Now, that's not a punt for the ruble. I'm not telling everybody you should be buying and holding rubles, But we had the same thing where we highlighted this for Mexico, when everyone was saying, well, China wreck, you see the currencies matching us. Well, all the friend-shoring nations that were bringing Chinese product into America, like Mexico, were for 3 or 4 years were better performing currencies than the dollar. So actually the dollar is one of the worst performing currencies of the last 3-4 years since 2025. 2020, my apologies, the end of 2020 through to 25. So post the COVID bounces, literally that whole period, the dollar's been very poor in a category that's all being debased. So here we are. We sit also with David Hunter saying there's no inflation. In fact, inflation is being overstated. It's already at the Fed's target rate or under. Again, another person who we think is wrong. We're not attacking people here, by the way. We're attacking principles. I'm just using avatars that have put out a certain message where our position is different. We could be wrong and they could both be right. Our position, however, that we feel quite confident about is the stagflationary environment, in fact, a hyper-stagflationary environment, which is going to be far worse than the 70s because the criteria and the current people do too much what I call associative thinking like the 70s. The criteria or the situation in terms of precious metals and the 70s versus today is that in actual fact debt is far higher across all levels, and you have a far more synchronized global economy that's all in the same position. That's why it's hyper. It's going to be far larger, and its stagnation because of the excessive levels of the debt is much, much higher. This is why we are where we are, and that is why that shopping till basket that the lady found in 2020 and checked out with the put in the checkout basket the exact same items was 134%. That is virtually 2.3 times more expensive in 5 years. Now, when you go up 2.3 times in 5 years, that inflation rate is very high. It's deep in the teens. And not that closer to 20 than it is to 10. That's the maths I'm running for you on that. Let's go back to Britain. Britain's in a similar position, but amazingly the pound has actually got stronger more recently against the dollar because the dollar's been the weakest out there. However, what's going on, let's keep riding now and take on our hill. What's going on is the problem with Labour. So Truss's idea was actually the right idea. You need to make a positive environment for entrepreneurs and doing good business work and keeping your rich people in your country, not chasing them away. Keep your entrepreneurs in your country, not chase them away. And also ensure a business-friendly environment for operating, doing business, making profits, etc., etc., etc. But she chose to dip into the overdraft a little further. The Bank of England, which is actually a Marxist organization that wants a new world order, working with other central banks, World Economic Forum, BlackRock, Vanguard, and all these other status entities that are all individual corporations with the same intention and plan, is actually to bring about the elite ruling classes and a UBI surveillance existence for the rest of us. That's where we are. I've got my Bolshevik hat on with a red star. In lieu of celebrating this fact that we already are in a Marxist world right now. So the next step in this crisis is going to be Britain, because Labour got in after a bunch of pretty poor conservative governments who were happily advancing, by the way, all the agendas, including the immigration agenda. So having said all that, the Conservative government were already letting in all the immigrants of fighting age, and it's just gone ever faster under Labour. All the hotels and everything, the welfare budget is blowing up. And what you don't do in sound economics is punish your business entrepreneurial classes, increase capital gains, and wave in welfare classes that just want payments for existing and are coming for a free existence, what I call welfare tourists, especially when they're all male and appear to be leaving their families behind and are of fighting age and will probably end up being UN white hats in a false flag event, or blue hats, whatever they get called, in a false flag event where warfare sees all the indigenous population males being marched off into a mincing machine, or a martial law civil riots type situation, which they will stoke with outrage, two-tier policing and other things. So there's all sorts of agendas being marched forward in the UK. But what's clearly already happening in the markets is that bond traders are 100% dumping British debt. British debt is being dumped. Fact. We had a major trigger on 2 of the durations of the long-term debt on Friday. A major trigger. And the 2 others had triggered already and had made first interim and were consolidating there for an extended period, have now reasserted and broken to the upside. As I've mentioned, all these charts we have shared on X under the market sniper, and I will probably do quite early in the week a UK debt-based crisis. Now, since 2020, we have asserted rates are going to go higher, debt is no longer an asset class, and that housing market is going to collapse. In all the Western worlds, particularly America and the United Kingdom, but generally, we already know commercial is a wreck because of work from home and all forms of violence in urban areas, given all the immigration policies, which makes offices a rather unattractive place to go to. New York, probably the last place I'd want to have to commute into every day to do work. Expensive, tightly packed, high cost, and then long queues to get out if you drive, or very poor quality public transport overrun with nefarious criminal actors, and London fast going that way. So commercial property, of course, was one of the first casualties. We spoke a lot at length about that. But the resi, everybody doesn't realize that their values that they have on their residential property are entirely function of the lending environment, affordability. And what's going to happen as these rates spike, properties affordability is going to go down chronically. And if properties affordability is going down chronically, the prices people will be able to pay will go down immensely as well. So we have a property bubble. We also have an equity bubble that we expect to collapse. We were trying to highlight that the word melt up or blow off actually only comes when you're already deep in a bull market and then you go very, very violently upwards. Not as so many people in my feed seem to think and say, hey, you were wrong. David Hunter's right, we're in a melt up. Bouncing off a 27% crash, even though you bounce violently, like a V-shaped bounce, is not a melt up. Even if you get 7% higher than you were before, you've actually had a crash and then a nominal increase that isn't particularly large on a stock market that's valued in dollars that has gone down in value far more than the 7%. So a nominal all-time high after a 27% April crash is not a melt-up. A blow-off top is when you're first already in a bull market, you're already at all-time highs and in a long trending bull market, and then you get a violent upside move, like a sudden parabola. Now that was dot-com markets of 94, 99. You were already at all-time highs. You hadn't had a crash of 27%. You're getting ever more expensive. There was absolute FOMO and dumb money rushed in, and you went in an absolute spike upwards and then had your crash. That's a melt-up market. And it's important to point out that that melt-up market, whether you divided it by gold ounces, Swiss francs or Russian ruble, it didn't matter. It was still a melt-up market. You could rebase it to any other asset class. The best asset class performance-wise into that blow-off was that tech .com shares. Cisco, Amazon, all of them. You could rebase to gold, you still had the same thing. The chart should be in a bull market already at all-time highs, trending higher highs, higher lows, blow-off. That's a blow-off. That is the blow-off. That is the blow-off, and it's a melt-up. Melting up off a bottom after you've crashed 27% is not a melt-up. It's a rebound. It's a bounce. Most of that territory you'd already done before. You're just reclaiming territory you hadn't done before. So for those that were pushed into the shares market, if you're an American, your dollar has lost more than your equities are higher than they were before the April crash. So anyone who was calling for a melt up before the crash was clearly wrong, because most people wouldn't have held 27% to the downside unless they were hodlers. They couldn't be leverage trades. And if you were just an investor, not a trader, you would have had to sit through a 27% correction to pick up 7% marginally higher than before the correction. But you also would have had the dollar down on average 11% against most semi-serious currencies. So I did the top 25 currencies of the world, and the dollar is down against all of them. And I mean, I'm talking, there's Brazilian real, there's a lot of Latin American, Eastern European. We're not just talking the Singapore dollar here and the Swiss franc. And in fact, on average, against all of the top 25, it was 8.5, which is an ironic number, because with gold at its current levels and what it was 54 years ago for $4.22, and then 3,350 odd today, that points to a devaluation of the dollar at 8.5% over 54 years, each year. So I'm throwing in a lot of topics here. A blow-off, melt-up is something that is already at all-time highs in a bull market by technical definition, and then surges in a FOMO extreme move in a straight line up, and then has a similar type crash as you saw, 94, 99, NASDAQ market. And it didn't matter if you rebase it with gold, it still was killing gold. It was killing Swiss franc. It was a melt up on all measures. That means it was the best asset category to be in, the fastest mover from 94 to 99, until suddenly it wasn't and then became the worst. So to be accurate on melt up calls, you need to be at the all-time high, trending higher, not facing 30% corrections, and then have a melt up, a blow off top. My suspicion is there's very little energy for the same level of dot-com boom melt up on equities once this bond market starts unwinding. There's going to be real fear. And then people will learn the bond market always knows before the equity market. The equity market will keep going up for a few days, weeks even, while what I'm describing in the bond market is coming. And then suddenly it's going to matter. And equities will start to have a very risk-offy type vibe. That's my prediction. And when rebased to gold, the NASDAQ has not had a melt up. When rebased to the Swiss franc or the euro, the NASDAQ has not had a melt up. When rebased to the Czech krona, the Hungarian forint, and the Russian ruble, the NASDAQ is actually losing ground. So a melt up must mean also, by definition, valuation increase. And the only reason certain people don't notice this fact, that it isn't really a major increase in value against other benchmarks, is because they don't recognize that we're in fiat and debt debasement times, and they're not adjusting for that debasement by using the internationally accepted inflation proxy that is gold. And the bigger the debasement, the bigger the bull market in gold. The bigger the inflation, the true inflation, gold doesn't care about government stats. The bigger the debasement of fiat and debt, the bigger the bull move in gold. That's on the macro time frame, by the way. We did say that for a short period, potentially, gold was not going to perform so great. That's also turned out accurate. No new highs, slipping lower. Why? Because in April, we got an absolute finishing surge. And I don't say finishing surge as in that's the end. I mean an accelerant that drove us to 3,500 in very short succession. And it was stamped on when it got to 3,500 hard. I am on an e-bike and I am using the battery, but I still think I need some props. It's 34 degrees out there. And it don't go unless you pedal. And we actually had 37 degrees on Thursday. Here, it actually hit. And when it says 37, feels like 41. It even explains it, feels like 41. Nicosia was 43 degrees. That's a town inland in a dusty old bowl. That 43 degrees would have felt like 45 or 36. So we're in a bit of a heat wave. Round here. So if you accept that the fiat currency debasement is being masked by a cartel, a corporate fascist cartel that involves government politicians, which are Marxists basically, supremacists who want to rule over us all, and corporations that have been set up and funded to privatize wealth so that these same bent politicians can get exorbitantly rich, like Nancy Pelosi, who's worth almost $500 million for having a face like a slapped ass, too many facelifts, and being an absolute stooge for the Zio complex, and front running with the help of her husband every government contract that her and her governments and the Trump governments award to the likes of Palantir, Amazon, Microsoft, for all the servers, farms, data collection, etc. And for those of you that say, you know, Francis, that's a conspiracy. It is. It is a conspiracy. I don't buy conspiracies, Francis. Well, let me tell you, Larry Fink, Lowell Finkelstein, when I get to name him, he's a good boy. Lowell Finkelstein of BlackRock, who's been the front runner of everything you hated about the Biden years: transgenderism, transhumanism, white man guilty, the Gillette adverts, the Nike adverts, the BLM riots. Everything that you hated was funded by him, Soros, and his corporate BlackRock, and his allies, Blackstone, Vanguard, State Street, Wall Street, crowd. And he is now being put forward as the temporary head, following the chief pedo. And if you've ever seen a filthy old man walking around naked with a tiny pippy and some bridal garter around his leg, wait till you see Klaus Schwab in that exact guise. Yes, plenty on the internet about his events where he strolls around children and people a lot younger than him, buck naked, with just a bridal garter around his leg. These are your inversion, perversion leaders. They're all part of a cult that is very globo, homo, trans, everything perverse. The transgender is perverse, particularly it's a mental disease. Well, Larry Fink is now the stand-in chairman of the World Economic Forum. So let's get this straight. A private corporation, if that's what you believe it to be, CEO, that actually manages and uses the proxy votes of everybody who invests in ETFs. So a private CEO has been made chief executive officer of a European based by name and activity New World Order Quango stroke Bilderberg type group that says to you, you don't own the water that falls on your roof of your house. What they mean to say is, we own all resources in the world ourselves. And you're just being randomly lucky and you may not use it or take it for yourself just because it falls on your property. Those were the words of the Nestle head, who was also up, the Nestle head and CEO, who was also a potential name involved in becoming the temporary stand-in CEO of the World Economic Forum. Think about that. Think about that for a minute. Think about that for a minute. The CEO of Nestle, known to me as a child, but no more, as a Swiss chocolate maker, that branched into everything else, including water, turned into a mega corp of food provision, water, chocolates and confectionery, and anything else you can poison your body with, is now an aggressive water marketeer and cornerer of the market. For example, Pellegrino and Perrier, while supposedly competing brands, are actually owned and held in the same ownership company. In short, it doesn't matter whether you order Perrier as a sparkling water or Pellegrino, you're paying the same master in the world of mega brands that have been acquired in the food chain, mega corps. That Nestle CEO, who is essentially asserting ownership over the weather, the rain, and even telling you that things falling into your property don't belong to you, hits the right notes for a Marxist supremacist ruling class organization such as the World Economic Forum, who of course was very pro-vax and vaccination, and works with all the big pharma corporations, wanted this guy for head, then chose Lowell Finkelstein, who has used all the voting power you've given him by buying Vanguard, BlackRock, and State Street ETFs. Look at that view. Beautiful. We'll get a bit closer. Let's do it now. Let's get a bit closer now. See if I can join up a path. Has told you that white males are the great racism. We need to end whiteness, which sounds like a genocide and a murder. There's the sea, my brethren. For this we ride today. It was all uphill, it was huffing and puffing, but that's quite some view. I hope you're enjoying it. Look at those paths that go down there as well. You can ride down all the way there and swim in the sea at the bottom. So when you have Lowell Finkelstein and Nestle CEO running for head of a corporate fascist bringing the Marxism for the masses organization that continues to assert that white males are bad, particularly white males, but whites generally, and had the likes of Barbara Specter say Sweden is reluctant in accepting that Europe cannot be allowed to be a homogeneous society anymore, and that, she said, must be at the forefront of this revolution. That was Barbara Specter, nothing antiseptic that I said there. That was her, and will be resented for it, she predicted. Fancy that. Fancy that. I mean, check out the stats to know what's going on. How women, indigenous women in all the European countries, are significantly less safe thanks to those that are being resented for their amazing work, brought to you by the likes of Barbara Specter. I'm not mentioning them, I'm just quoting a woman saying how she fears, you know, she's going to be resented for her leading role in the browning out of Europe. It's funny that people like so many others that want to talk about Europe versus America and drop you into a nation state or economic zone versus economic zone, and drop phrases like Davos, when actually the biggest attendee at Davos are Americans by miles. I think it's 22%. I think the next is at 17%. Somehow do this miracle whip of staying well clear of the good old Zio question. Probably had a bit of whispers in the ear, or being paid for the misrepresentation and the framing of Trump as a grand, great leader. Let's be clear, the guy who brought in the vaccine that has done untold harm, not released the Epstein list, and done the deals with Palantir to track and trace you entirely. Let's go say hello to some goats. If you don't see nefarious acting in the likes of Barbara Specter and her statements, this is tough going, then you'll never see it. And then you see the agenda unrolling, and Malmo is now a slum. Destroying countries are us from the inside, with that very cultural undermining corporate Marxism that we were warned about in the 70s. I forget that Russian guy's name. Put it down in the comments. His videos are everywhere. The psychological warfare, the cultural undermining, the winning over the woman with care, empathy agendas, the feminism promotion, basically the creators of inceldom and feminism, divide and conquer through the genders and through the races, by the way. I've nothing against someone who is fleeing a war. Normally it's them, like Bosnia, for example, them and their children escaping once their house has been bombed. No problems there. Help the people, rehabilitate, and in the peace send them home to continue their lives. Don't let them be slaughtered. Look after them, help them get back on their feet. All good principles. Don't send in welfare tourists of males only to undermine and destroy a culture. That's a very nefarious, dark deed and agenda. These drop downs are getting super interesting now. We took a different tour, you might have seen today. It's high up, one with rocky goatee pass. Unbelievable views, but it takes a bit of suspension to survive. So you can think it's Davos, which is 22% American, 17% UK, 16, 14 China, Europe, etc., etc., is undermining you. Or you can see Davos just as one of the many groups and organizations, such as BlackRock, the corporation, World Economic Forum, probably some foundation. I don't even know if it's a corporation. It may not be. You guys tell me. But they'll be in all shapes and sizes. World Economic Forum doesn't have a product and isn't weaponized by the huge profits that BlackRock is making on its BTC ETF and all its other ETFs, but particularly BTC right now, as your freedom coin. Bitcoin, your freedom coin. I've got to the point where Bitcoin maximalism, for every year that goes past and new coins have dropped and new facts about the digitalization agenda drop, that people that are still maxidom by a year, they drop 10 points an IQ. We realized in 16 when we engaged that this was probably from the get-go, even though we said you've got to be in it to make some of the money. Same as we say Apple's going up whether I own shares in it or not. The status tokens are very like the Mag 7 stocks. They're going up whether I like it or not. You may as well take the money. It's called hold your nose investing, where you literally have to wipe the shit taste from your mouth and just say it's better to be a rich slave than not to be one, because it'll pump anyway whether you're in it or not. You're not even a pimple on the fly who's on a camel's backside in terms of financial relevance to all of these agendas. The attack vectors come from governments, which are all captured and are actually low middle management. They're not even middle management, they're lower middle management. Starmer is just a rent boy hiring pervert who's easily blackmailable, quite happy to sell his soul to just make a few bucks and do his time in service of what is essentially an evil cartel that people like Trump will tell you is all divorce. Not a certain other group of people that seem to have a real appetite for Marxism, communism, and state capture at every level, and that the US didn't just vote right and there guys fighting, stick to the plan. Stick to the plan is a code way of saying stay inert, you don't need to do anything. Stay inert and watch your capture. It's please be a deer frozen in the headlights. Please continue to be a deer frozen in the headlights so that we can run into you and throw you into the back of the van and stick to the plan. Trump's playing 5D chess are the mantra calls of Zionism that brings a Marxism for you and that endorses corporate fascism. So corporate fascism, Google, Palantir, BlackRock, combined with political Zionism, Trump, and all he does under the AIPAC ADL lobby, which is all every American president does since Kennedy, ends up in Marxism. And that's why you will own nothing and be high as a kite on whatever pharmaceuticals they give you until they switch you off and determine how many years you're worth retaining alive. And right now, they want to kill a lot of people. So let's be clear, every upload of Marxism is followed with a genocide, particularly of people that have taken risks for you, like me and others, much bigger names and much bigger risks. But this is certainly a risk. And you know, here's the story, and that's why I've got limited time spitting truths like this. I'm going to be winding down. I'm going to be disappearing. Sad fact. Because And there was a great story of Napoleon, actually. There was an Arab that fought France's invasion in the Arabic areas quite bravely and got many troops to fight. And Napoleon eventually got him captured. The courts said he should be executed as an enemy of France. And Napoleon said to him, listen, executing an opposition leader is actually poor form. Give me 10,000 pieces of gold and I'll let you live. He said, I don't have the 10,000 of gold. I spent everything in waging the war. But I have many, many merchants who, through, our campaigns and favors that I've done for them, owe me hundreds of thousands of gold coins. He says, fine. I set you free in your chains, not set you free, but take you with your chains to those same merchants, and you collect the 10,000 gold coins. Yep. And not one of the merchants paid any money for him. Not one, for all he did. And in fact, they blamed him. They said, yes, your war and everything. Turns out the merchants just wanted to be trade. They valued trade more than their freedom. And now that they could see that they could still continue to trade and operate as slaves in their own country, controlled by France, with France taking a tax and everything else, they just thought, why will I give this guy any money who fought for our freedom? So he was unable to raise any of the money and was beheaded. And actually the story of Che Guevara, that's far been me comparing myself to anything like that, because he was a communist first of all, but cultivated into a mythological hero now. But let's just ignore some of those details. A shepherd gave him up in a cave. He was sleeping in a cave. And the shepherd said, a soldier asked, this guy's fought for you against your oppressor. How's it you gave him up? And the shepherd just said, his presence here disrupts my sheep. This is a true tale. People are incredibly local, selfish, and small-minded about people that need and are trying to serve them. I'm trying to serve you. I'm trying to debunk a lot of bullshit that you've been given by people that tell you it's divorce that's doing it to you, not the whole, and that America is safe and winning. You just need to sit tight. By the way, not long after the UK rates get out of hand and the UK gets to be the first big Western nation of humiliation. Great sights, isn't it? Quite tired, huffing and puffing. For those that say I speak too fast, they'll enjoy this slower delivery. If it's too slow for you, hit the 1.25. I'm not offended, trust me. Hit the 1.5 if you want. Just don't believe I'm that fast on the bike. Yeah, the UK will be almost certainly this week. There's going to be more articles. Now, we've been talking about the UK rates, specifically the UK rates, for the better part of since the turn in the bond markets. We were particularly hard on the British. Go now if you doubt us, because we have quite a few doubting Thomases as well. Look, I don't need to prove anything to anybody. I'm not out to do that, but go and search GBP or UK debt-based collapse. Go see the bond analysis when those first patterns triggered and how they went up. Then they got put in holding patterns for a while, and now they're running again. We've been giving coverage on YouTube to the least sexy market in the world, the bond market, and they want it that way because it's the god market of fiat and currency and debt collapse and housing collapse and everything collapse. Debt markets are way more important than stock markets. Fact. That's why you're being kept away from them. You've been encouraged not to understand them and told, buy Pepsi Cola, buy Apple. If you like the business, buy the item, buy the shares, not the product. You know, that kind of spiel. The most important market for you to understand is the debt markets. And they're often our least watched videos. The Japanese debt markets win hands down because it's some small island a long, long way away to many Westerners. The UK debt markets are not far behind. Anything US will get some views, but debt markets, I should be covering the stock market most of the time, just using my debt-based analysis to do it. I'd have 10 times the views, and individual stocks more. We do that in the community, by the way. We trade stocks, indices, everything. We told you that the Singapore index will all melt up. So there's stagflation coming. And the thing with anything with the word flation in it is nominally things go up. It's an absolute fool's endeavor to call shorts. I think eventually you'll get one on the equity market when these debt markets get disorderly. But in an inflationary environment, the falls are smaller. Even though we had a 27% April bloodletting. Retail went in full and is winning for now. Margin borrowing is at all-time highs. All measures, PE ratio is virtually 30. All measures, it's probably the most overvalued. It's still not a melt-up. It's not a blow-off. Blow-off isn't rebounding from a 27% fall. As I've already explained, it's not 94.99.com, which is the best example of a melt-up blow-off equity market, which was killing every asset class. You could use inflationary measures, you could do anything. It was killing them all. This one is not. Because the insiders know. The central banks know. They know you get lies, damn lies and statistics. They lie to you about a recession with an employment number that they later admitted was a lie. The employment number, that is. It lost 819,000 in a year despite regular monthly revisions downwards. That's what we were talking about earlier on. So the whole game is you have to keep the marks, and you are the marks, you are the patsies at the poker table, we all are, me too, confused and misinformed when the most obvious things are happening. You're literally breaking the economic system. You are literally breaking the economic system. But you spin the story, equities are at all-time highs. What's wrong with you? You've never had it so good. Of course, they'll be feeling pretty rich because the debt that they borrowed at very low rates is being debased chronically. And in actual fact, the market is at all-time highs. They bought the markets or the shares, which is the best trick in the game. Donkeys. I like donkeys. The emblem for Democrats, by the way. There you go. Go be a donkey or a goat. Or an elephant. Elephants are trained as babies tied with a rope. They grow up as adults and they see the rope still holding them, even though psychologically they could smash it. Untether yourself from the invisible leash. See the great game. Don't fall for phony narratives pushed by people that may actually be funded thereto, or actively blind because they're being kept out of it by other parties. Marxism is coming. 100% for you. Reduced freedoms, reduced wealth, high interest rates will crush your property investments. And that brings us back to the United Kingdom. This week, you're going to see more headlines as the truth starts to run of Rachel Reeves, Rachel from accounts, as they say, and Keir Starmer. Let's be frank, if unearthing black holes was a business, Labour would have the monopoly and an absolute megacorp of ownership in that business. They've unearthed more black holes and created, of course, because unearthing means they're inherently responsible for making them in the first place. They're such space cadets, they deserve to be astronomers and astronauts. And the only reason their megacorp would fail in manufacture and creation of economic black holes is that they'd probably tax it into bankruptcy or force it offshore, taking all its jobs, its wealth, its balance sheet into the Jersey Islands or Dubai. Dubai is a trap. Dubai in the Middle East is a trap, designed to look good. They are shepherding the rats towards that. Dubai Emirates is a trap. Those guys, you fall foul of that government. There's no human rights law to protect you in a place like that. Let me just warn you. That's where they ran, the West ran their torture chambers in the war against ISIS that they paid and funded. They circumvented American law. So interest rates will spike. A community member had asked about his London property. And I told him, I can't give you advice, I'm non-regulated. But if it were me, I would sell your UK London property, which he promptly did. This was now over a year or two ago, and he sold it about a year ago. I'm telling him now, you just sold the top. I'm saying congratulations. You just sold the top on UK property. The rates are going to go through 7%. Trying to remember which one it was. Was it the 20-year that I saw it at through 7? I must look again. Don't quote me on which one. They'll all in due course go. They've all got targets, higher targets. The one with the biggest setup right now has a target of 7.15. I think it's the 20-year. By the way, when banks create mortgage products, they create a lending tool. They create a lending instrument of 20-year, 25-year, 30-year duration. Don't fall for phony narratives, guys. Don't fall for phony narratives. Don't be misled. The rates are going to explode up higher. By the way, I said there was a 99% assessment of a September cut after the CPI number, which was when BJ posted his tariffs aren't inflationary tweet. And like I say, they can be right, these guys, and I can be wrong. And then it's, all egg on chin for me. I do this to contrast opinions, and I can be wrong. But I've been looking at this for a long time. We're the people that called that 40-year turn in the bond market. Doesn't sound wrong to me. Tariffs are inflationary. We are in an inflationary environment. We're also in a stagnating economic environment. unemployment is worse than you're being told, inflation is higher than you're being told. They need that. It's called financial repression. It's called financial repression times. And that's how you debase debt. It's also how you squeeze everyone out of their property that you want to own. Most people's biggest asset are their homes. Some people it'll be their stock portfolios. Some people it'll be their crypto portfolios. But generally it's the homes. If someone's really wealthy, it'll be, and smart, it'll be his gold and silver, then his share portfolio, then his crypto portfolio, and then his home that he owns outright. But that, you know, most people aren't in that space. And they know that. And they want your home. They want you to rent your home from them. And in the same way they talk about the water not belonging to you that falls on your house, they look at your home that you put an Amazon Bezos camera inside for security as actually their home. You're just not paying your rent for it yet. So your security camera provided to you by Amazon.com, Bezos, that is biometrically scraping, watching, listening, your Samsung TV, everything else. That is doing everything else in your property, is actually looking at its own investment, which is your property, and counting the days till you pay a proper market-based rent instead of your property taxes. Because if it was 100% your property, under full property law, you wouldn't pay taxes to anybody. You do pay a council tax. There's no option to not pay it. Even if you don't use the dustbin services, the water services, the electricity services, you're paying a property tax. So it's not 100% yours anyway. But they are looking forward to the day when they put the true rental for it up. And you pay a market-related rent, much like your tenant does in your buy-to-let. That day is coming. And they're going to do you with a spike on interest rates. And Britain, mortgage rates are going to go exponentially higher. And the property market will crash, and actually repossessions are already growing. Repossessions are growing, and the ability to borrow is reducing. The deposits required are increasing. The rates are increasing. And the desirability of that asset, inverted commas, that they created, debt instrument, is decreasing chronically. Hence why they have to charge more to make it more attractive to sell on, which is securitization. But the appetite for that has decreased too. So they now have to look at you as you might become their debtor who can't pay. Where previously they could transfer that risk to somebody else, a portfolio manager of debt instruments. That's where you're at. And those rates are going up. They're absolutely going up, and property will go down. Watch for those charts on X. Recognize we're in a devaluation of fiat and debt cycle. Financial repression is here. It's a thing. Realize you have to protect yourself. The inflation trade is gold. The stagnation trade is your own business rather than a job. You're going to get laid off potentially. Live within your means. Save the rest in precious metals. Pay off anything that is on debt. Not advice, my opinion and take. So that you don't get flushed out when the interest rates spike. Our message hasn't changed. All that's happened is you subsequently saw. In 2020, everyone thought I was stupid. You've now subsequently seen a 55% collapse, just like we called it on TLT. Now I'm telling you, the housing market is next. Everything that is financially engineered of high value. So you have to decide. And let me say this, those Airbnb guys that put nothing down or 5% down and have 10 Airbnbs in Miami, Florida, Nevada, Vegas, Houston, let me just tell you, those guys are going bang, in my take. And if you're one of those guys, mark below market very realistically and sell fast. If you're lucky enough to have any equity in it, even at a below market price, be prepared to discount further. Get out and survive is a great thing. People aren't going to have discretionary income to pay your mortgages for you on an Airbnb. You aren't going to be making a great income. The assets will be marked down. The banks will be asking for more security. And they will also be increasing rates. You could go from a 0 or a 5% down to being obliged to go 25% down and actually paying a higher interest rate if your banks have the option of variability. If you haven't fixed your debt long term, no matter how ugly the rate is, you should consider it in the UK. Again, not advice, my opinion. Till next time, I'll talk to you guys more. Hope you've enjoyed the ride around. I'm going to get myself a coconut water. It is red hot chili peppers out here. You had the man in a Bolshevik hat tell you everybody else's take, tell him where he stands differently on everything. Thanks for watching. Hit the like and subscribe if you want to trade the opportunities that come out of the stagflation, the hyper stagflation, and build wealth while most are losing in a counter-cyclical manner to the rest of the world. You need to click the bottom link, not the bottom link, the link below. Book a call. We're getting incredible continuation structures on many markets that are moving, from equities, indices. There will be coming again precious metals, just possibly a bit dull for a while longer. The short on the UK bonds, again, not a recommendation, but there'll be trades to be taken for those that understand. You can build wealth through this collapse by virtue of understanding the nature of the game. Till next time, I'll catch you later. Bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups? Looking for a better way to trade? Why not be part of a principled, structured, and technically based community set inside a unique trading methodology? Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser or app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time, and with focused effort, you'll begin to look at charts, price action, and markets in a whole new light. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.